Okay, well, good morning, everyone, and thank you for joining us for this session. We're going to be talking about the ATO's new non-charity NFP reporting requirements and what that entails. So as a starting reminder, obviously everything here is going to be general information. Please don't go and buy or sell anything based on what Bob and I discussed today. We are recording the session, and so then we'll put a copy of this recording on our website after the session, along with the slides as well. You should find in the meeting a Q&A button, so if you have any questions as we go along, please do type those into that Q&A section. Otherwise, you'll find that your camera and microphone are muted to facilitate the ease of the session as well. Where possible, we will address the questions as we go, and any other questions we will leave right until the end. So talking today, the main part of the session is going to be presented by Bob, and for those of you who don't know him, Bob's a rather fabulous person, and has been, I've put some of his things on the slide there, but professional advisor for the ACNC and a lot of experience in regard to governance and charity tax matters. And then for those of you who don't know me, I'm one of the other partners here at Australian Audit and have a lot of experience in audit and the not-for-profit space as well. And both Bob and I have been on the boards of multiple not-for-profits. So what are we going to talk about? So a bit of an agenda to give you an idea of what to expect. I'll start with a brief introduction to the NFP and try and, I guess, guide you as to where do these non-charity NFPs fit in the scheme of things. And then Bob's going to take us through what are the 8 different categories that these have to fit into and how does Mutuality interact with that. And then at the end, we'll talk about the ATO online services and how we use that to attend to this NFP annual self-review return, which is the new thing or the change, I guess, in what's being dealt with. So in terms of the NFPs, this is a slide that came from the ATO. It's about 12 months old, but the numbers wouldn't have changed a whole lot. And it's helpful just to give a little bit of context of what's the size of the NFP area, but also where do these entities that we're talking about today fit into in the scheme of things. So they've done some research where they found that across Australia, there were potentially up to 600,000 not-for-profit entities. It's a really large group. Within that, there's probably about 220,000 of those that actually had an ABN number. And so you'll see that that's where we start, where we've got this population of about 600,000. And then from that, you come into the registered not-for-profits. So that's those that have an actual ABN number. Within those that have an ABN number, there's about 60,000 or so that are registered with the ACNC. That's 60,000 registered with the ACNC. They automatically get income tax exemption, and we're not talking about them today. There's about another 160,000 that fit into this criteria called self-assessed income tax exempt. To date, they have not had any lodgement obligations up until this year, but those are those 8 categories that Bob's going to talk us through. And to date, there'd always been an expectation that they would complete an annual form that the ATO provided, PDF form that you downloaded and you kept on file. You never lodged it to anyone, but that form was this reminder to say, do I still qualify for one of these 8 categories? And then outside of that, there's another group of about 9,000 entities, which are what we call taxable not-for-profits. And we often hear people saying that, well, because I'm a not-for-profit, automatically I don't pay tax. Isn't that right? Not realizing that actually you can be a not-for-profit, and that doesn't automatically mean that you get an income tax exemption. You get the income tax exemption either by being registered with the ACNC or by fitting into one of these 8 categories of self-assessment. If you don't fit into either ACNC or one of the 8 categories, you then end up in the taxable not-for-profit, where you still need to lodge an income tax return. And there's some other statistics on the slide there as well from the ATO that essentially just are highlighting that the not-for-profit industry as a whole is really quite sizable. So then when we kind of drill down into this group of 160-ish thousand entities that we're talking about, you'll find there's the 8 categories that Bob's going to talk through. But what was interesting and perhaps a little bit concerning to hear from the ATO is how little engagement that 160,000 entities have had with the ATO to date, which in a sense is not surprising because they had no lodgement obligations. But now that they are having lodgement obligations, this is going to cause issues where they may not have a MyID. They may not be linked up to the online services. And when the ATO now says you need to log in online, there's some barriers or friction there, which I'll discuss at the end of the session. But you can see that from the ATO, they're saying, well, we've got this 160,000 entities that now need to lodge, but there's probably only about 10% of them that actually have that MyGovID set up, and quite a small number that are using a tax agent or a BAS agent to date. So I'll hand over to Bob, who can now talk us through these 8 categories.
And Al, you'll progress the slides on my request. Good. Good morning, everyone, or good afternoon, wherever you are in Australia. Let me take you through the wonderful world of these 8 categories of income tax exempt charities. Now, these 8 categories are actually quite strict, surprisingly more strict than people will imagine. Community services, sporting, cultural, educational, health, employment, scientific, and resource development. So your organisation, if it isn't a registered charity, has to find its home in one of these 8 categories. Now, NFP organisations have to meet the specific criteria and conditions for each of these categories to be able to self-assess. Next slide, please, Al. So NFPs with only charitable purposes may be eligible for income tax exemption only if they're registered as a charity with the ACNC. So one of the issues here is if you are a charity, you shouldn't be filling out the self-assessment form. You should be registering with the ACNC. NFP should check if they have, let's move to these common requirements. So thanks, Al. Just go back to that last slide. So NFP should self-check if they have charitable purposes by downloading the application checklist from the ACNC. Surprisingly, you might find the organisation is charitable. I gave advice to one choir last week and urged them to think about applying, if they wanted to be a cultural organisation. Now, they hadn't thought of themselves as a cultural organisation, but singing is a cultural activity, an approved cultural activity. Next slide, please, Al. So here the rubber hits the road. The common requirements are that they have to meet all of the following requirements. They have to be a not-for-profit society, association or club. They have to be established for community services purposes, except political and lobbying purposes. They cannot be a charity. They have to comply with the substantive requirements of their governing rules. Now, people gloss over that, but they often find, with close examination of their governing rules, they might be doing things which are called ultra vires. In other words, without a power to do those things in their constitution. So we all straight away go to the importance of the governing rules of the entity. And frequently they are not revisited apart from voting rights. It applies to its income and assets solely for the purpose for which it was established. If it finds itself, sometimes you get cultural drift. An organisation was established to do particular things which are in its rules, but is now doing other things. And the income and the assets may not be solely applied for its established purpose in the governing rules. And finally, it's got to meet one of three tests, that they're a deductible gift recipient or prescribed by law test, in other words, in the Income Tax Assessment Act, or they've got a physical presence in Australia. Now, what does this mean? They have to incur their expenditure principally in Australia, and principally means 50% or more. Okay. You get to, sorry, Al, go back one. Important to recognise there are disregarded amounts from gifts, donations and grants. The expenditure attached to those particular gifts, donations and grants is excluded when you look at that physical presence in Australia test. Next slide. Now, here we have an issue that is causing great consternation. Am I a community service organisation? Well, the rules here are quite strict. Community services purposes are altruistic, means they are established and operate for the well-being and benefit of others. Well-being and benefit of others. Now, what does this mean? For the benefit or welfare of the community or any members who have a particular need by way of youth, age, infirmity, disablement, poverty, or social or economic circumstances. So a simple purpose of being beneficial to the community isn't covered here. It has to be related to particular needs. So you move straight towards the relief of disadvantage here. Organisations that seek to advance the common interests of their members are not altruistic and cannot be community service organisations. For example, if you have a card-playing club such as bridge, they exist for the common interests of their members and aren't altruistic, even though they might be supporting the promotion of bridge as a community activity. Because they're advancing the common interests of their members, they're not altruistic. If an organisation's main purpose is lobbying or political, again, that won't be income tax exempt. So before we leave this slide, you have to find a connection to disadvantage in the community if you're going to be a community service organisation. And if that's the case, you may as well register as a charity. Food for thought. Next slide. Cultural organisations. Again, the choir, happily singing around the countryside, didn't think that they might be a charity because they are cultural. The main purpose must be for art, literature, music, or for musical purposes, such as concerts. Any other purpose has to be incidental, ancillary, or secondary to the music purposes or encouragement of art, literature. Now here we've got the difference between a main purpose and an ancillary or secondary purpose. So you may have, this becomes an important issue when looking at your constitutions. It's not a sole purpose of being cultural, it's a main purpose. There may be other purposes, but if you can demonstrate that your main purpose is cultural in this circumstance, then you can be a cultural organisation. But here we have the third dot point there. If the main purpose is providing social and recreational facilities and activities, it will not be exempt. Draw a big circle around that particular point, because the ATO does not like people having fun. If the activity is social and recreational, then it's a big cross for income tax assessment purposes. If that becomes the main purpose, you won't be able to self-assess as an income tax organisation. This also applies to organisations which, go back one slide, Al, sorry. If you're giving money to encourage the arts and literature, but primarily you are providing a bar and social activities for your members. So a secondary purpose of raising money for culture isn't enough. It has to be the main purpose. Move to next slide, please, Al. Now, educational organisations, this is a very strict definition, far stricter than the adult and community education purposes, which would be charities. So here we've got an educational organisation is a public educational institution, which means it's available or open to the public or section of the public, and its sole purpose is providing education. Any other purpose of the organisation must be incidental or ancillary. That's that secondary purposes notion. It includes universities, NFP colleges, secondary schools, etc., all of which are eligible to register as a charity. So this is really a residual category if you are not charitable. Excludes for-profit entities and associations that provide for member professional benefits, parents and friends committees, and scholarship providers. Those particular ones are excluded there. Health organisations. Next one, please, Al. Health organisations are a public hospital. A hospital is carried on for not-for-profit society or association purposes, or the one that is a private health insurer. Includes hospitals, but accommodation must be provided. So a day clinic, for example, wouldn't qualify here. You have to provide accommodation as well as healthcare. Thanks, Al. Employment organisations. These are employee associations, employer associations or trade unions. They have to be in Australia and pursue their objectives here, and principally means mainly or chiefly in Australia. Less than 50% is not considered principally. That's a straightforward one. You don't have to register as a charity if you're an employment-based organisation. Next slide, please, Al. Here's one that you might not encounter very often, but is possible. A resource development organisation. They may be not-for-profit and established for the purposes of aviation, tourism, or various Australian resources. Promoting development can be by means of research, providing facilities, training, improving marketing methods, facilitating cooperation and similar activities. It doesn't include buying supplies for members in bulk or undertaking joint marketing activities of their businesses. For the accountants in our webinar today, this can be a potential avenue for some organisations to be considered as income tax exempt as a resource development organisation, provided that last dot point is excluded. Next slide, please, Al. Scientific organisations. They're advanced science by research, exploration or teaching, and they disseminate information. The scientific institutions do not include organisations run for the profit of their individual owners or members. Professional associations primarily run for the professional or business interests of their members. Specifically, doesn't include any research conducted under contract where the IP is owned by the client funder and the research cannot be disclosed to the public. So this is quite a unique, specific area, and you need to look very carefully at the relationship between the parties involved. Next slide, please, Al. Now, this one will be of interest to many people, and that's sporting organisations. Now, focus on the word main. The main purpose has to be the encouragement of a game, sport, or animal racing. Any other purpose must be incidental or ancillary or secondary to that. So, for example, you may be a yacht club, for example, promoting the sport of yacht racing, and you may have a bar and restaurant, all the funds of which go to the promoting of the sport. Right, so that gives quite a clear definition of what a sporting organisation is. However, for some organisations, that main purpose isn't clearly set out in their constitution. And you may find the constitution reads with multiple purposes rather than a very clear main purpose. So a sporting organisation that's been a sporting organisation for 50 years may find a problem with their constitution not articulating clearly what their main purpose is. If that's the case, and the ATO ask questions of the organisation, which they can do after lodging this form, then you'd have to point to other evidence of the history of your activities as a sporting organisation. Thanks, Al. I'll go to the next page. So what's a game or sport? There are some exclusions to this. It doesn't extend to stamp collecting, the keeping and showing of pets, model railways, vintage cars, and other various social and recreational pursuits. Sometimes I think the ATO is governed by gnomes, but I've taken a particular exception to stamp collecting and keeping and showing pets, and let alone model railways. I have several friends who are model railway enthusiasts, and they quite see it as, if not a sport, certainly almost the characteristic of a game. So game and sport have their ordinary meanings, which means their meanings as defined in common usage. Games and sports extend to athletic games or sports, such as football, swimming, and non-athletic games such as chess and bridge. So there must be an element of competition in it to get for a non-athletic game, although there are some non-competitive sports, for example, which could also qualify here. Next slide, please, Al. So sporting organisations, the encouragement of games or sports extends to less direct means, such as research or testing, the developing of referees, the providing of sporting facilities. So as long as the main purpose is sport, then you qualify as a sporting organisation, including sporting facilities which are used for a variety of different sports. But we'll come to a case study shortly where one organisation found it had problems. Next slide, please, Al. So here's an example. For the encouragement of game or sport, an NFP association's purpose is to provide a sports ground for the use for local hockey, soccer and cricket clubs. If that's its purpose, then the association will be exempt if it's not a charity and also meets the other requirements. Now, here's the problem, and you can use this case study to illustrate the thinking that has to be required for all of these income tax exemption cases. So here's an excerpt from the constitution of the XYZ Sports Association. Now, you'll see the objects and purposes don't immediately say what their main purpose is. Right? In fact, hockey, cricket and other sports is down at object D. What's object A? It's to maintain a club of non-political character for the accommodation, entertainment and comfort of the members and their guests. And you'll see automatically an ATO auditor would say, well, that's your top object, and it's clearly about member benefits, and in particular sport, recreation and entertainment. and your sporting priority is down at 4. In fact, ahead of your sporting priority is C, generally to afford members and guests all the usual privileges, advantages, conveniences, and accommodation of a social club. So you see the problem there. If their main purpose is as a sports association, then the Constitution does not show that. And this will lead to an amendment of the Constitution before the submission of your income tax exempt form. Next slide, please, Al. Oh, we have a question. Can you bring it up, please, Al, before we go on?
Hey, Bob, I've got the question here. It's coming from Ian, and he says, can an educational training organization offer scholarships without affecting its NFP status?
Now, the question is this a for-profit registered training organisation? If it is, the RTO can't be income tax exempt because it's for-profit, but it may have a scholarship fund which can be separately developed as a charity. And it can have deductible gift recipient status. The typical way of doing this is to set up a separate trustee corporation controlled by the not-for-profit who would administer a trust deed that would have the sole purpose of providing scholarships for the completion of vocational education courses, for example. Any other question so far, Jesse?
No, it's just that one.
Okay. Right, so this is the problem of mixed purposes where the objects don't state a main purpose. So if there's one message I want you to take away from today is have a look at the governing rules. That's where the ATOs start, with those governing rules and your website or your public documents. If these don't clearly say, as in the case here, there are 3 objects related to social activities and only 1 to sporting activities. The ATO loves arithmetic in relation to these matters and would say you've got a predominance of social activities. Next slide, please, Al. Now, if you've got a problem with the Constitution and the ATO asks you questions about it and you haven't changed it, you can look towards your main purpose being evident in other things. But if the club's main purpose is providing social and recreational facilities for its members, it won't be exempt. This is the case even if the club gives money to encourage games, sport and racing. However, other club records will help to indicate the club's activities and purposes. Resolutions made by those controlling the club, the board, committees and directors, minutes of meetings, business plans, promotional material, published reports. If the main purpose of the club is carrying out non-sporting activities, the club isn't exempt. This is the case even if the club gives money. A business plan reflecting the main purpose of the sporting activity should be available. So you can have other sources of evidence even if there's a problem with the Constitution. Next slide, please, Al. The wonderful doctrine of mutuality. Al, I'll let you speak to this.
Okay, so I guess to introduce into mutuality, this is where we've just sort of, I guess, to keep things in context, come back to that main slide about what are the entities we're talking about. So we had the ACNC entities, which was that 60,000. We've had the self-assessed income tax exempt, which is that population of about 160,000 entities that they have to fit into one of those 8 categories that Bob has just gone through. And so if you do fit fully into one of those 8 categories, you sit in that self-assessed income tax exempt. But if neither of those apply, you then come down to this taxable not-for-profit, which as a starting point, you've got this entity that in its objects, it says it's a not-for-profit and it's designed for some purpose other than generating profit. And it's now going to have to prepare an income tax return and potentially pay income tax on the profits that it makes. However, there's this wonderful doctrine of mutuality. And so mutuality then sits there as a way that we can potentially reduce the amount of income tax that would be otherwise payable by this taxable entity. Even though taxable but not for profit. It sounds almost contradictory, but they do exist. And they will have to either submit an income tax return, or if their taxable income is below the relevant threshold, around the $400 mark, they may be able to submit a no return required lodgement.
Thanks, Al. Let's go to the next slide. So I presume I'm doing this one, Al, that's correct?
Yes, over to you, Bob, to take us through mutuality and how it applies.
Now, this is the old doctrine that goes back many, many years. A NFP can self-assess as income tax exempt if it can apply the mutuality principle. That simply put, an entity isn't taxable on transactions with itself. Now, this applies to membership-based organisations, clubs, societies that are not exempt from income tax, but don't have to pay income tax on transactions with its own members. For example, this is social clubs, business and professional associations, sporting clubs mainly engaged in providing hospitality to their members, and strata companies and owner corporations. Let's move to the next slide, please, Al. Any profit made by an organisation goes back to the operation of the organisation to carry on its purposes, and it's not distributed to any of its members. This applies both while the organisation is operating and when winding up. So there has to be a not-for-profit clause and a dissolution clause in this entity's constitutional rules. Next page. So mutuality law is a legal principle established by case law. It's based on the proposition, again, that an organisation cannot derive income from itself. It provides for whether a number of persons contribute to a common fund created and controlled by them for common purpose, any surplus arising from the fund is not income. The principle doesn't extend to income that is derived from outside the group. So that leads us to the issue of transactions with non-members. So let's have a look at that. Next slide, please. So as a result of the mutuality principle, receipts derived from mutual dealings aren't assessable income. They're called mutual receipts. Expenses incurred to get mutual receipts are deductible. However, not all dealings involving members are mutual dealings. Principle of mutuality doesn't apply to dealings between an organisation and a member that goes beyond a mutual arrangement and are in the nature of trade. So say one of the members is a carpenter and he provides an invoice for work on the club, right? It's in the nature of trade. Let's move on to the next slide. When an organisation transacts with its members, it must ask if the activity is either a trade or something in the nature of trade, producing a profit. For example, rents paid by a member for the exclusive use of a collectively owned asset for their own purposes, say to a house to house their personal boat. So this may be non-mutual income for a yacht club, for example. A mutual arrangement which at most gives rise to a surplus of funds to the organisation. For example, a bar is provided for the benefit of all members so that sales from members contribute to the common surplus of funds. So that's clearly allowable and non-taxable. Next slide. But here we've got the meaning of member, and the ATO has been really tightened up on this. In the past, you'd have a temporary members book, which was signed by an existing member, and you'd be a member for the night. Now, the rules for the meaning of member have been tightened. So a person is a member of an organisation where the person has done all of the following. Applied for membership, which may entail being nominated and paying the appropriate nomination fee. Have been accepted by the organisation, for example, by the board of directors. Paid the appropriate membership subscription. They don't have to have voting rights. They may be, for example, temporary, honorary, social or reciprocal members, but nevertheless, temporary, honorary and social members who have not been through the above membership process are visitors for tax purposes, and transactions with them are assessable. This also applies to reciprocal members, that is, members from another organisation sharing reciprocal arrangements. So those last two dot points create issues for many sporting clubs in particular, and certainly for any social or membership-based organisation. Next slide, please. Let's look at the categories of revenue and expenses. Non-assessable revenue is revenue from mutual dealings. For example, memberships. Please go back one. Revenue that the tax law classifies as non-assessable, e.g. donations received. But non-deductible expenses, including expenses related to members, for example, the cost of membership badges, that's included as a mutual expense. Expenses that the tax law specifically says are non-deductible, fines and penalties. Next slide. Here is assessable revenue. Revenue from trading activities with non-members, fees for hiring function rooms, etc. Revenue from sources outside the organisation, bank interest received. Revenue that the tax law specifically says is specifically assessable. Payments to fulfil a lease obligation. Deductible expenses, expenses relating to non-members. For example, the cost of running a function solely for non-members. Expenses related to fully assessable income, e.g. Fees for earning bank interest. Expenses that the tax law allows without apportionment, e.g. contributions to staff superannuation. Next slide. Now we have apportionable revenue. In other words, it has to be split between mutual and non-mutual. For example, from trading activities between member and non-member, the bar sales have to be split between member and non-member activities. This is if you can't meet the definition of the 8 categories. Apportionable expenses, expenses from trading activities relating to members and non-members. Again, for example, bar expenses, the cost of goods sold have to be split. Next slide, please, Al. So what are the consequences for XYZ sporting associations? They can't self-assess as a sporting organisation unless they dramatically change their operations and their constitution to have a main purpose of actively organising the sports, and then the facilities may be ancillary. They need to submit an income tax return, and they will be assessable on their non-mutual income. That's a pretty big change for them as an organisation. Move to the next slide. Right, I think it's time for questions. Oh, no, Al, you're going to go the NFP, ATO
Yes.
online services and the self-review return.
Thank you, Bob. So we've seen where we got to with what are the 8 categories, where does mutuality fit into it, and now we come to how are we going to deal with the ATO and where does this new online return fit into things? So before I get to the content of the return itself, what we need to consider is that the ATO is using this lovely terminology where they say they're moving to be digital by default. So in creating this NFP annual self-return, they've essentially designed it so that it almost only can be done using their online services. They haven't provided a paper-based copy. You can't go onto the website and download a PDF and fill it in and post it to the ATO. But then in order to use the ATO online services, the organisation needs to be connected with the My ID system, connected up to their ABN. And that's even if the NFP is going to use a tax agent or a BAS agent to attend to the lodgement for them, they will still need to get this MyGov ID, or now branded My ID, set up in order to be able to appoint a tax agent. And so there isn't even the option for NFPs to be able to say, well, I'm going to let my tax agent do it so I can just skip over all of this. So I thought before I get into the return itself, I'll just have a look at what are the steps that need to be followed. And so for the people on the call that are managing an NFP, the treasurers and so on, this is what you'll need to do yourself. For those on the call that are the accountants, this is what you'll need to tell your clients to do so that you can actually get them appointed as a client in the tax agent portal so you can then attend to the lodging of the return. So the biggest issue we will come across here is that the contact people registered with the ATO are not the people currently involved in the organisation. And as this, the original testing, the original conversations of this NFP annual return were happening, one of the most common potential errors that was flagged by accountants and people involved in it was that in many, many instances, the contact people are out of date. The ATO even did a test where they picked a random sample of these NFP organisations and tried to contact them by post or email or phone, whatever details they had on file, and found that a very high percentage they weren't actually able to get in contact with at all. The ATO online system, it assumes as a starting point that the person that's currently in charge is the same person whose name is registered with the ATO, and if that all links up, everything's reasonably smooth. But when that's not the case, what do you then do? And we see this constantly, whether it's small PNCs or PNFs where they have a new board every year, or even just any other type of not-for-profit where oftentimes we've found that the ATO might have 3 or 5 people's names on their list, and half of them have already passed away and half of them ceased being involved in the organisation more than a decade ago. And so it's not even like it's the person from last year that you can go to them and say, oh, could you please just log in so you can update to me? So the ATO has brought out this new paper form, and I've put the ATO reference there on the slide. You can either search the ATO Quick Code 46370 or look for the paper document called NAT 2943, which is that paper form. And so that allows you to print out this paper form, fill in what the current contact people are, and send it off to the ATO. The form looks a little something like that. I've put some of the pages there to give you an idea, but it essentially allows you to update the address, the phone number, the email, the associates, all of the people relevant to the association, post that off to the ATO. The ATO have said they'll try and process it within about 12 weeks, and the ATO has even said that once they have processed it, they will contact back to the NFP to advise that the form has been processed. The important point you want to be looking at here is section F in the form, which is about the associate details. Associates could be an office bearer, it could be the director, the partner, the trustee, or whoever. But when you fill in those associate details and the ATO processes the form, that's the trigger that will then allow you to connect up to the digital services. So that's quite important. But because it's a paper form, because it's waiting 12-ish weeks for the ATO to process this form, you need to be sending it in quite soon so that there's time for it to be processed, because once the form's processed, then you as the current treasurer or current board member will be able to connect up the online services so that you can then either appoint a tax agent, a BAS agent, or lodge the forms online. There's a lot of acronyms that the ATO uses here, but the things that I've put on the slide there is about MyID and RAM. Some of you may be familiar with that terminology of MyGovID, and I guess they worked out that it was too confusing between MyGovID and MyGov, so they rebranded it to MyID. MyID is that digital identification system from the ATO, and they have this other system that they call Relationship Access Manager. Hopefully it's reasonably simple for you to go through the process, but it's once your name is listed as an associate against the not-for-profit's ABN, you then use your MyID to log into Relationship Access Manager and then follow the prompts to link your MyID with the ABN of the particular not-for-profit. Hopefully that almost makes sense. If you haven't used the MyID, previously known as MyGovID, you'll want to go through that. And what the ATO has flagged is if you can register as a strong level in that system, the linking for the online system will go through smoothly. If you only meet that level of standard, you won't be able to do it online, and you'll actually need to phone the ATO to get the next steps, which is where you link your ID with the ABN of the not-for-profit. And having linked them together, you can then either log directly into online services for business, and having done so in online services for businesses, which is that ATO portal, you can lodge this annual NFP return, or alternatively, you will be able to appoint a tax agent who can then lodge that form on your behalf.
Alastair, we have a question from Liz. She's saying, if associations already have their associations online access set up, do people need to go through this ATO process?
Thanks, Chassie, and thanks, Liz. Associations Online is a system that is used in Western Australia. So for those on the call that are from other states, just to put that in context, where you've got an incorporated association, you have the state-based body, which in Western Australia is the what used to be called the Department of Commerce, that manages those associations. They have this online system called Associations Online, which is there for loading up changes of constitution and removal of auditor type of paperwork. It's a completely separate system to the ATO system that I'm talking about today, and whether or not you've got Associations Online is not going to help you at all in relation to the ATO system. I hope that answers your question, Liz. So now I'll jump into the actual NFP self-return. So you've gone through the process of getting the ATO's digital ID and access to the ATO's online services for business, and you then log in and you'll find this NFP self-return waiting for lodgement. The ATO has been clear to say that this is not an income tax return, and it is primarily non-financial in nature. You should find, if you've got your records reasonably up to date, it shouldn't actually be too difficult or too onerous to fill in this annual self-review return. predominantly the questions is essentially asking you which of the 8 categories do you fit into, and do you still qualify to be in that particular category. So the ATO announced this back in 2021. So it's been a couple of years process while they've been designing this system and doing a little bit of trialing and getting a bit of feedback. And they've said it applies to any non-charitable NFPs that have an active ABN number. So you saw right in that very first slide, I mentioned there were potentially up to 600,000 NFPs, but only about 230,000 that have an ABN. So if you're in that 400,000-ish category of NFPs that do not have an ABN number, you can ignore this annual return lodgement. It doesn't apply. It applies to those NFPs where they do have an ABN number and they are not ACNC registered, and it came into effect from 1 July 23. So we're talking the 23-24 financial year that this return will then belong to. And as I've highlighted, it needs to be lodged using online services for business or by appointing a tax agent who can use their online services for agents to lodge this return. And in a sense, the ATO has said there's going to be 3 questions or 3 sections in the return. I'll go through in a little bit more detail what they are, but if you're sort of hearing, I've got this annual return, I'm a bit worried, it's a little bit scary or concerning, or what am I going to have to talk about? Essentially, you're going to have one question that says, tell us a little bit about your organisation and tell us if you fit into the small, medium or large category. 2 or 3 questions in section 2 that ask about which of the 8 categories do you fit into, and a summary and declaration you sign off at the end. So it's actually, once you're able to get into the system, hopefully reasonably easy to actually be able to complete. Initially, the ATO had said that this was going to have a lodgement deadline of the end of October. I think they've realised that that might have been a little bit optimistic, and I'll come to what the new lodgement dates are shortly. So as I've said, this return is asking you which category do you fit into. It kind of takes you through a little bit of a guided process to double check, do you actually fit into one of those 8 categories? And I think that's where sometimes when people look at the list of the 8 categories and just the names of them, they look at one and think, oh, I definitely fit into that, easy. But then when you actually drill down and look at the more detailed requirements, you've discovered actually those categories are more stringent than the names may indicate. So, questions that you need to work through, and if you want to kind of be a little bit pre-prepared on the ATO website, they do actually have kind of the question tree there, so you can read in advance what the questions are. Some of them are multi-choice and it'll tell you what the options are going to be as well. But essentially that first question about organisation details is going to ask you, what's your estimated annual revenue? And you just need to choose between, are you in the 0 to 150,000 a year group, 150 to 3 million, or above 3 million. So it's not even asking you exactly what your turnover is or what your expenditure is, what your profit. It's just asking you for that categories of small, medium, large. It then takes you through and gives you a list of those 8 categories that Bob just took us through, and essentially asks you to pick which of the 8 categories you fit into. And having selected one of those 8 categories, it'll tell you a little bit more on the screen about the detail of what that is, and sort of say, now that you've reread the detail, are you sure you actually fit into that category? It asks you to confirm that your constitution or your governing document has those important clauses that were mentioned, the clause that prohibits distribution to members and the clause about winding up that generally would say on winding up any surplus needs to be given to another organisation with a similar objects. There's a couple of questions that ask you about where whether you operate in Australia, and checks whether you have charitable purposes. And the whole questionnaire is designed to kind of give you prompts and use some of those benefits that are available in the online environment. So for instance, the question that asks about charitable purposes, if you select yes and say all of our purposes are charitable, it's essentially then going to pop up and say, have you considered registering with the ACNC? Here's a link to the ACNC website so you can go down that registration pathway because you no longer fit into the self-assessment pathway. You get to the end, you have that summary where you sign off and say everything's correct. You can print out the form and it will even then say on there, we encourage you to share this with your board of directors, with the rest of the organisation, and to hold a copy of that on file as well. When you get to the end, you complete the lodgement, and based on the answers you've provided, it's going to say, yes, you do have that income tax exemption, you do fit into one of the 8 categories, or no, you don't. The ATO is kind of, there's a few people that have said, oh, well, but what if I just don't lodge this? I don't want to lodge it. What if I do nothing? The ATO has kind of mentioned they are able to issue penalties, but they seem to be not wanting to take that pathway of penalties. And the ATO has kind of flagged that they are expecting that as organisations fill in this return, there'll be a large group that realise that what they've been doing for the last years might not have been 100% correct. There may be a population of organisations where in filling in this return, they discover that, well, they'd always thought they were income tax exempt as a sporting organisation, but actually they don't fully meet the criteria and they become a taxable not-for-profit, but maybe they will qualify for some of those mutuality options. The ATO essentially has been saying, well, if that's the case, fine. They're not interested at going back and trying to issue fines, getting things redone for the previous years. I mean, they've got that. If there's fraud, they've always got the option to. But they're kind of saying, if you identify that, the ATO is more interested in start doing it correctly prospectively, realise that you're now needing to lodge a tax return and apply mutuality and do that going forward, and you're unlikely to have too many issues from there. So originally it was going to, if you had a 30 June 24 year end, originally this return would have been due for lodgement 31 October. ATO has given a blanket extension until 31 March for everyone. You don't need to apply for it. You don't need to do anything. It's simply a change in the lodgement date until the end of March. And there is no obligation to do a return like this for prior years. It starts from the 23-24 year going forward only. Now, some organisations don't have a 30 June year end. There is this concept in the income tax legislation about a substituted accounting period. And so the ATO has given us this helpful table, which when they first released this table with the original due dates, it was a little bit surprising because you ended up with organisations with a later year end with an earlier due date. The ATO's updated it and they've now basically said for any financial year end from 31 December 23 up until 31 August 24, whatever your year end date is, the lodgement due date is going to be 31 March 25. After that, for the 30 September 24 and forwards, there's then the staggered due dates, which will be 15 April, 15 May and 15 June as per what's on the slide there. There's a small subset of organisations that won't need to complete this return. A few government entities, we've already said ACNC registered entities don't submit this return. Those that are taxable not-for-profits will not submit this return, because as a taxable not-for-profit, you will either be lodging an income tax return or you'll be lodging a no return required form. And for those entities that are what's called a not-for-profit sub-entity for GST purposes, they don't submit this self-review return because their income tax obligations are dealt with as part of the parent entity, not at that sub-entity level. So to recap, we started with a bit of an introduction to the NFP landscape. Where do these taxable not-for-profits fit into things? Where do the 8 categories fit in? Bob took us through each of the 8 categories with an example of the XYZ Sporting Association and tried to tease out what's the detail in each of those 8 categories. We then talked through mutuality and identified if you're a taxable not-for-profit, what is mutual income and what is not, and how does that play into your tax return. Followed up with the ATO online services. How can you actually get into the system if the details on file are too old? And finally, that NFP self-review return, which hopefully I've highlighted to you, is actually quite a simple return to fill out and lodge. It shouldn't take too long at all, provided that you can get into the ATO system to begin with. So hopefully you have found that useful and helpful in clarifying and understanding what is going on in the industry. What are those changes around that not-for-profit return? If there are any questions that you've had, please type those into the Q&A now so that we can address those. Very happy to take any questions related to these topics. Hopefully the questions that we had addressed, we've sufficiently addressed for you, but Chassie, are there any other questions that anyone has typed in the box there?
Yes, Mohammed just put one through now, saying if the sporting not-for-profit goes over the 150k income threshold and reaches for GST, do they still have to do the self-review?
So I'm happy to answer that. And the answer is yes, Mohammed, because we're talking about income tax assessment here rather than GST assessment. So don't mistake the 150k. It's common between the GST thresholds, but here we have 150k in revenue for income tax self-assessment as income tax exempt. The answer is yes. They still have to do a self-review.
Yes. Any other questions that anybody has?
We'll just give another moment if anyone is still hurriedly typing away and hoping to get their question in before we finish up. But otherwise, to everyone that has participated, thank you for your attendance. We do hope you found it helpful and useful. If there are any other topics that you would find interesting for future webinars, please send an email through to our address that's on the screen there. We'd be more than happy to present other webinars on other topics that you may find of interest. And thank you, Bob, for your helpful guidance and insight as well.
Thank you, Al. Just a reminder to everyone, the importance of having a look at the rules or constitution of the entity. That's a critical starting point. We can provide advice on that, and we have a specialist charity lawyer who can help in making any constitutional changes required to comply with income tax self-exemption, self-assessment.